Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, everybody. Welcome back to another stream. Hope you're all doing well. We are back in the charts, taking a look at setups, ideas, things to watch. It's a quiet start to the week. We had yesterday, James ran us through kind of the news that was coming. Relatively soft start to the week yesterday. We didn't really have any major U.S. news. However, in today's news, we do have CB consumer confidence, which actually may start to make a move for markets. We'll be watching this. Of course, this comes out in about 30 minutes, so we will be on air watching the reaction. But in these segments, if you are newer to the streams, the purpose of these streams, we go through trading setups, ideas, we react to market news, we do analysis, all sorts of good stuff. So I want to just encourage you, if you're new here, hit the thumbs up button, hit that subscribe button, and let's talk charts. So we do have CB consumer confidence coming out at 10 a.m., which, like I said, will probably be market moving. If you've never heard of CB consumer confidence, it is basically financial confidence is a leading indicator of consumer spending, which accounts for a majority of overall economic activity. It is a level, it's a measurement of a level of composite index based on surveyed households. So this is basically a look at the consumer, and the consumer is really important in terms of inflationary pressures, how the economy is going, so on and so forth. So we will be back with at 10 a.m. to watch the reaction to this news. I'll first start out with where I am at personally, guys. I am still long oil. I re-entered a trade here at support. And you can see so far looking really good start. This level of support seems very strong for bulls. This morning we had a huge rejection off of the lows. And again, I've been trading oil recently. It's not something that I trade incredibly frequently, but it is something that I think can be a very nice mover in the world of markets. Oil is one of those things. The second you think it's done going up, it just rallies way further, and vice versa. When it starts crashing and truly crashing, right? Some of the long-term kind of downtrends in oil can also be pretty nasty. But again, you get these huge momentum pushes up and these huge pushes down. So right now, I am of the belief that I think we can continue to see this uptrend persist. And if we're not right about that, if I'm incorrect, I've got my stop loss in place. My idea is basically a break through the lows will get me out of this trade, and this is my final attempt. So if this does not work out, I'm out of oil for the foreseeable future, and I probably won't be looking to go long anytime soon if this level breaks out. Now, so far, things are starting out well. I am long, like I said, down here. I shared this alert this morning inside of the Discord. If you guys are Discord members, then you probably saw this here real quick. Let me just do something. I'll pull it up so you can see it. Okay, so the oil trade that I shared this morning, like I said, huge rejection off the lows, picked it up in the VIP group, re-entering my oil long, stops below previous lows. This is my last attempt at longs on energy for now. Like I said, if this doesn't work out, I'm probably going to pause on any further attempts on the oil long trade that I've been on recently. Very strong rejection here happening on the lower time frames. 4-hour support still looks good, and fundamentals, in my view, are still bullish for oil. Some of those fundamental factors include, in my view, for why I think oil prices continue to stay high, is Russia and Saudi Arabia have rolled out plans to keep supply pretty much trimmed for the remaining components of this year. So if you're not familiar, Saudi Arabia and Russia are major exporters of oil. Now, in the United States, we create a lot of oil too, but we also use a ton of our own oil supply. And so the thing is, we don't really contribute to the global marketplace nearly as much as these guys do, right? So when Saudi Arabia and Russia kind of implement or kind of let everyone know, hey, we are cutting our supply out to the market, they have a really kind of a monopoly in some ways to what the oil market does. They want oil prices to be higher so that they can sell it for more money and make more money, right? So there are some factors at play, but I think that that trend continues. And until further notice, especially with strong economies around the economies are relatively stronger than people think they are. We still have really low unemployment here in the United States. Unemployment has not flown higher globally by any means just yet. Is that going to happen? Possibly. If there's true recessions around the world coming, then that might change. But for now, what we have is we have strong economies and we have oil prices that are being restricted by Saudi Arabia and Russia. So the oil move is very fundamentally backed, in my personal opinion. I spoke, actually, one of the people that I do a podcast with, his name is Ed Moya, and he is a senior market analyst at Oanda, which Oanda is if you're not familiar with Oanda, it is a major U.S. brokerage. It's got locations all over the world. I'm one of the podcast hosts on the Market Impulse podcast, and with Ed, we spoke about oil prices, and we were kind of in agreement that in terms of fundamentals, Ed is one of the smartest analysts that I've had the honor of working with. He's really, really smart. And he was kind of giving me this idea with oil and how, he's been bullish on oil since like the 70s. Like the 70s levels, so he's been really, really capturing at least he's been very right on this idea. And so I'm looking to kind of pull back by it, and we'll see how this one plays out. But again, my stop is in place on oil, and that is my full breakdown on the oil markets here today. The next one I'd like to cover with you guys here today is the indices. But before I do, let me just remind you guys, if you would like access to the trade alerts being shared inside of our Discord channel, where I'm sharing my trades, Frank, who comes on the show often, he shares his trades. If you guys would like access to those alerts, we're going to drop a link here in the chat to send a direct message to someone on our team. If you would like alerts from our team on trades that we are taking and full breakdowns like this, if this would be helpful to you, if you're looking for these explanations, we explain everything that we're doing. It's not just a, hey, I bought it here, I sold it here. We offer an educational service where we inform you every detail about our trade, why we are taking a trade, why we're entering here, why we're putting a stop loss here. If that would be helpful to you, send us a direct message. This link right here will take you to a direct message center where you can speak to someone on our staff about getting a membership. Again, it is very worth the investment. If you are somebody who is like, I'd really like to learn this trading stuff, but I don't know how, consider joining the group. It is built specifically for traders who are of all levels, especially people who are kind of like not necessarily brand new to trading, but they have some experience, but they're looking to become profitable and they need some help. Join us. And if you send this message here with this Signals VIP 15% off discount, you'll qualify for that extra discount because you're watching here on the stream. So click that link. You can also tour it if you'd like. Again, just message us on the support line here that is linked in the chat right now. So the next market that I'd like to cover with you guys is the indices world. The indices are still getting absolutely beaten down. And you have to ask yourself, is this because the dollar strength? And I would argue yes. A couple things that I want to go through with you guys here in terms of dollar strength. Why are the indices down? Why is gold getting beaten up? What is going on with all that stuff? Well, let me show you, at least my opinion, what is really driving the dollar higher today. So I mentioned the economy is strong, right? Relatively strong. We have low levels of unemployment. We have, GDP still very strong here in the U.S. Retail is not necessarily cracking. Consumers are still strong. All of these things have led, and not only that, the Fed has also said, yeah, we don't see cutting interest rates anytime soon, basically. All of those things have led to what is really driving the dollar. If you are a fundamentalist like myself, if you use fundamentals to spot great trends in the market, here's the thing. you should know about the 2-year. It's a very important indicator in the markets. It shows us what markets are forecasting. The bond market is forecasting for what interest rates are likely to do next. Okay. So the market thinks interest rates are staying high, and they think it's going perhaps even higher. But really the big thing is that the point is this trending up tells us that the bond market, which is full of very savvy investors, thinks that the world of bonds, or yields are going higher. Now that yield going higher, guys, that is a direct strengthener to, I don't know if that's a word. It's for the dollar. It's very strong. Okay. The dollar is rising higher because economic data is still strong. The yields are high and they look like they're going to stay high. The Fed looks serious. The Fed looks strong, and that's beating up on the indices. It's beating up on gold, and notably it's strengthening the US dollar. So I am still bullish on the US dollar at this time until further notice. That is my personal view. You get, when you watch my shows here, my streams here, my segments, I go deep into the fundamentals and combine it with technicals. So just because I'm bullish on this thing does not mean I'm buying it right here. I've mentioned that if I'm watching the dollar, there's a couple pairs that I like. Dollar yen might be an interesting one for me, but probably not until you get a pullback. So let's get some tangible ideas going with this. I've got the 4-hour chart pulled up, and what I'm looking for is pullbacks. Pullbacks to perhaps the 38.2% retracement, which lines up nicely with past levels of resistance looking left. We can now kind of incorporate the technicals. Now, something I will say, guys, if you are somebody who you just heard me go through all that fundamental stuff and you're like, oh my gosh, that is the real market movers, then congratulations. You've reached the side of YouTube that's not just fancy lines and charts and trend lines. The reality of markets is that they don't just trade based on drawings. They trade heavily based on what the fundamental and macro trends are looking like. And then we use technicals to kind of look for entries and exits. That is what I have done on my channel for a long time. That is what I do in my own trading. I am a macro, fundamentalist, if you will, in markets. I look at the real drivers, what is really truly driving. You have to ask yourself, guys, if you've been trading currency pairs or gold or indices and you've been struggling and you're like, I don't know why I'm struggling, and all you're doing is drawing up charts. Again, I think that technicals can be very strong, and I don't want to downplay them. But macro moves, real market moving events, they are real powerful forces that drive trends. And if you can spot them and understand them, again, I think it opens up a whole nother world in terms of trading clarity. Anyways, dollar yen is a bullish reading on the EDGEFINDER. If you aren't familiar with the EDGEFINDER, it is our economic data scanner. Basically, it takes into account a ton of data: GDP numbers, inflation, unemployment, interest rates, retail sentiment, commitment of traders data, seasonal trends, and of course the price trend as well. It takes into account all of these things and gives us a score bias. So right now, as I've gone through all of this fundamental stuff with you here this morning, this is generally going to be my bias based on the EDGEFINDER, which automates a lot of what I just said. So everything is kind of being taken into account by the EDGEFINDER and then scored appropriately by the algorithm that Frank and I have pretty much designed. Now, one thing I will say is I'm still long on oil. You can see that trade idea came from the EDGEFINDER. Dollar yen, I just mentioned bullish. That idea also came from the EDGEFINDER. And then you have pound dollar bearishness, euro dollar bearishness, Aussie dollar bearishness. So anytime I'm curious about a setup or I want to confirm like the fundamentals a little bit, I go to the EDGEFINDER because, again, it is pre-programmed to calculate stuff with all of this. If you don't have a copy of the EDGEFINDER and you would like a copy of it, here's how you can get a copy. We're going to drop a link in the chat right now. It'll take you to a support center where you can speak with someone on our staff to hear more about the EDGEFINDER, to get some information. If you'd like to see some examples, if you'd like to hear more about how it might help you in your trading, if you're looking to incorporate fundamentals and you have not yet, again, the EDGEFINDER is built specifically for traders who want some economic data confirmation in their trades, so they're not just trading purely technicals. Again, there's nothing wrong with trading purely technicals, but understanding macro trends, fundamentals, and incorporating them in your trading has, for a lot of people, been the breaking point. It really can add clarity to market moves. Speaking of market moves, in just a few moments, we have consumer confidence. But before we do that, we're going to now shift and go a little bit more technical. I've given you guys my fundamental breakdown, and we might get a little bit more fundamentals with Frank. I think he's in the room as well. But we're going to also go to Tom and get some technical setups on the currency trading side now that we've talked a little bit about the fundamentals. Before we do that, we're going to take just a quick break to thank our sponsors, and we'll come right back to Frank and Tom to go through some trade setups right after this. Check it out.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we are back. We're joined with Frank and Tom from Simply Forex. You guys know Frank, he's here every day, but you probably also know Tom if you're a regular. Let's say hey to Tom. Hey, Tom, how are you?
Yeah, morning, Nick. Morning, Frank. How are you guys?
Doing good. How are you, Tom?
Yeah, good, thank you.
It's good to have you back, Tom. Tom, this week, slow start in terms of market news, which, as we talk about often on the show, we talk a lot about economic figures and stuff that's driving the markets, but even technical traders, right? I know, Tom, you're mostly a technical trader with what you do in and out of the markets. Even technical traders, of course, have to kind of pay attention to when those news events are likely to occur because of the implication of market moving price action to follow those news. So we have some news coming later this week. Some red folders are on the horizon for us, Tom, but give us at least now, what are you watching before, kind of pre-news here for this week ahead?
Okay, guys. So yeah, I've been looking at a couple of yen pairs, and like you said, Nick, I am purely technical, but I have to be aware of trades before big news comes out. I if I'm in a trade, I might take some profit or even tighten my stop loss. But yeah, I'm obviously fully aware of when news comes out, but don't necessarily trade it. But technically, the things I'm looking at are, a couple of yen pairs, and we've seen a couple of chart patterns. Let's start with Swiss franc, Japanese yen. This is the day chart, guys. And, we was up here and we was in this range, and then we've just sort of slowly got, lower highs. And this is a descending triangle, guys. Yeah. And then finally, the idea of a descending triangle is that it descends, and we finally got a candle that was very bearish that broke out of this triangle. And ever since then, we've been looking for shorts. But it's worth pointing out, this can also break to the upside. It is a descending triangle, but it can break either way. So we've been looking at Swiss franc yen since Monday, trying to get in on this trade and take price potentially down to here. I'm still in this trade for around 20%. And there was also pound yen, which has had a, not quite a descending triangle, but we've seen this, slowly break down. Okay. And it wasn't until we broke out of this gray zone that I become interested in pound yen. And we got this nice bearish candle here, the catalyst to start looking for sells. And again, guys, we've been looking for sells ever since this red, this bearish candle broke all of these lows. And we actually had a trade earlier on pound yen, which I'm still in. And if I just explain the entry a little bit. So, there's this level through here on the H1 chart. And as you can see, these lows kept holding. So this became an important support zone for the H1. And then ever since we got this break over here, we got a retest into here, we've been selling from here. And the idea is to come back down to here. We got stops up here, and we're just looking to take this lower, guys. So on the H1, it looks really good. It looks like nice breakdown in structure. You know, we're not making, you know, we're just making lower highs, which is good. But on the H4, yeah, we have had a little bit of a, you know, a bullish wick appear. But as long as those hourly candles, you know, don't start making higher highs, I will stay in this trade and, you know, look to take it back down to this low. Yeah, so a couple of yen pairs. They're the two that we're looking at today.
Very cool. Very cool. Yeah, thanks for that, Tom. Again, I mentioned by bringing in just the variety of guests that we do, it's always nice to get people who are more fundamental, people are more technical. Frank and I kind of are somewhere in the middle. We do a combination of the two. So maybe we'll also ask the same question. Frank, setups, ideas. Are you still in that gold short? Because gold is tanking here, and I know you sold it earlier this week. Are you still in that trade?
I am, yeah. Still holding on. But
very nice.
Well, other than gold,
yeah, I think there's a little bit. Go ahead and explain it.
Yeah, he was talking about yen pairs, so I figured I would pull a Tom move here and whip out the weekly chart. I really like CAD yen right here to the short side, just because there's this double top on the weekly, and it's coming up to test it, and it looked like it was going to break above or stay above, but it didn't. And so I kind of like this just because of the yen strength we've been seeing. So the risk off sentiment overall in the market's just pretty alarming to the risk appetite investors and everything. So, you know, I like testing this level here. It could see some buyer exhaustion. But other than that, you know, I'm not really looking at indices right now. I'm not confident in what's going on right now. So if I were to look for anything, it might be a short, but even then I don't really want to short the market. So yeah, it's just basically CAD yen.
Sure, fair enough. Yeah, no, I think in terms of market confidence, things are really shaken up from what the Fed has been up to and what they've been saying. You mentioned so yen. You're watching the yen a little bit. Gold, of course, also kind of that safe haven to a degree, but maybe not so much as the dollar, because it seems like right now you're favoring the dollar over gold by shorting here. Can you show us like your gold short and where you got in?
Yeah, so let me check Discord really quick. I don't remember the exact price. 1925. And I am trying to get this to like the low 1880s, where that this level is, this previous bottom, 1887, 85. I like that break under the wedge pattern. So we saw what looked to be a breakout last week, and then it just rejected really hard. So we got that false breakout, came down underneath the wedge pattern. So I'm happy I kept re-entering gold, because I would either stop at break even or trail out. So every time I trailed out, I would just look for another opportunity. So I like this short here, and I'm hoping that it'll go lower. And if it closes underneath that wedge, then I'll feel more confident about my short trade.
That's awesome. Yeah, I kind of you know, we had this conversation probably a week or so ago where you were pretty bearish on gold, and I was not. You know, I was kind of I still kind of am neutral, to be completely honest. But I know during this time, you know, you started looking at shorts after this major rejection. So that's a huge trade. Congrats on that one. And I do kind of think, you know, in terms of gold, it looks like price, for those of you guys who are watching it on the 4-hour chart, looks like we're breaking this level of support here as we speak. And if that candle closes bearish, there's probably a good shot that we see gold retrace even further down to where Frank is talking about, that 1887, 1888 level. That, again, marks kind of a major level of previous support. But again, gold does not look super attractive, and it makes sense from a quick fundamentals, a nod to the fundamentals. If you think about, the Fed is going to keep rates higher for longer. Suddenly, even if I was to go into something super risk off, it would probably be more likely the dollar or bonds or things like that than gold, which of course typically does well. The last thing I will say, gold fundamentally, if they do start to cut interest rates at some point, yet inflation is still high, that is the supernova for gold. That is the most bullish environment that you can think of for gold. If inflation is still very hot, yet they have to start cutting rates due to recession, that would be the most bullish case for gold. So maybe we'll get there at some point, but that would be very interesting.
I do
Tom,
want to mention one more thing.
Gold.
Oh
yeah, go ahead.
Just one more thing on the daily chart. Sorry. But one thing that caught my eye was this 50 and 200 SMA. When they cross, so say it crosses above the 200, the blue is the 50, the red is the 200. If it crosses above, that is called a golden cross, which I'm sure all of y'all know that. But seeing this get so narrow and the way it looks like it's turning towards each other, could result in what's called like a death cross, and that is also a long-term bearish signal on the charts. So from a technical side, seeing that could also be, the shift in this direction is real. So maybe in the next couple of days we'll see these averages cross.
Yeah, it should be interesting to see. Again, it's certainly looking ugly for gold price action on the daily. Tom, what do you think about gold? And while you're at it, if you want to just give us a quick view of the indices as well. I know Frank mentioned indices and gold. What are your thoughts?
Yeah, okay, guys. Let's start with gold. And it's just tricky, to be quite honest. It's not nice price action. I mean, if you just look at the weekly candles, you've got a weekly bullish wick and then you've got a weekly bearish wick, which is not easy to trade. There's lots of, contradiction there. But basically, we're in a kind of a range between, these two levels on the weekly. But if we look at the day chart, for me, we were still in an uptrend which makes it difficult for me to trade. And I've just been staying away with gold because I've been getting such mixed messages with it. And, if we followed price action down, it broke. We was actually looking for buys up to here. And for me, it's still in an uptrend until it breaks this low. So structurally, it is in an uptrend, but these candles that we're seeing are just not telling me to buy this chart whatsoever. I had the same, diagonal trend line put in. So it'll be interesting to see where this daily candle finishes. Yeah, you've got really double support here. You've got trend line, excuse my drawing now, I've been drinking. We've got this trend line here, and we've got this support level here. So this could act as quite powerful support. Yeah, but it'll be interesting to see how this daily candle finishes at this level. Yeah, really interesting. So gold, I've just been staying away from. It's been tricky price action to read for me. And then
I don't mean to interrupt you, but we do have just 1 minute here before the news. I'll come right back to you because I do want to hear your thoughts on indices after this. What I've done here is I've just prepped the chart so we can watch the reaction to consumer confidence, which comes out again in about 45 seconds here. Indices, speaking of which, before we even get to look at the charts, you can see NASDAQ is just selling off here. In the first hour here of the New York, open in the stock world. So really kind of a creepy start to the day. Dollar seems to be kind of on the rise. Oil doing its thing as well. And gold, like we mentioned, challenging at least this 1910 level of support. So we'll see how this number comes out. Again, about 15 seconds. So we'll go breaking news here and we'll come back and see what the number's at. All right, should be any second now that we get CB consumer confidence. Give us a little insight into the U.S. consumer. All right, and dollar is initially making just a slight retracement. NASDAQ hasn't moved much. Gold shooting up. Oil staying flat. Dollar down. Let's see if we have any numbers on it.
It's down.
Okay, there it is. Yep. So slightly less than expected. New home sales also down compared to what was expected. So consumer confidence coming out 103 compared to 105.5, showing perhaps some contraction in the consumer. But nothing too notable. If this was really market moving, you'd have a huge spike one way or the other. So anyways, we'll go back to Tom. Sorry to interrupt you for that, Tom. Indices, where are we currently at?
So the NASDAQ is teetering on the edge, basically, because, you know, in the weekly chart, I always start with the weekly chart and then work my way down. But, you know, at this point, we're clearly in an uptrend at this point right here. But now we're starting to see lower highs. So this is a bit of a red flag for me that, you know, potentially this could become, you know, a downward channel. So we've got that, and we've got lots of selling pressure into this last low. And for me, if, you know, it's all about if this holds. If this breaks, we could see some real selling off on the NASDAQ and potentially other indices. And, you know, and we've got lots of room to move into. I mean, arguably this would be the next level of potential support. So it's at a really important level for me. Yeah, if it breaks this level, you know, lots more room to the downside. It might take a while for it to do that, you know, but if we keep seeing lower highs, this is a red flag for me that eventually we could get a break lower. And if we look at that on the day chart now, you know, we did get a bounce off yesterday, which would suggest it's not breaking anytime soon. But again, you know, it depends what this daily candle finishes. But yeah, real pivotal level for the NASDAQ, this level here. And we're, you know, clearly sellers are in control. Yeah, we're in a very strong downtrend.
Yeah, I'm glad you pointed that out, Tom, because where we currently sit, it certainly is a decision-making spot for bulls and for bears. And if that level breaks, I'm totally with you on that. That looks, it's been ugly, but I think it could get uglier if that level breaks. Because again, you know, that attempt to go higher yesterday, if we close underneath the lows, that looks just like a textbook, what is called a dead cat bounce, which is like, you know, it just cannot find a bottom. It's not, you know, and then that can lead to some serious sell-off. So indices, again, look bearish to me until further notice. Frank mentioned that as well. We're kind of on the sidelines with indices and trading other things in the meantime. But yeah, should be really interesting to see where we go with that. Tom and Frank, I want to thank both of you guys for coming on the show and going through some charts with us. I want to say, if you guys have not already followed Tom on YouTube, he does have his own channel. It's called Simply Forex. And you can find Frank and I here every day. So we're doing the streams. Tom, thank you for coming on. Again, if anybody would like to check out Tom's content, we're dropping the link to that in the chat right now. And Tom, we'll see you back on the next one.
Yeah, cheers, Nick. Cheers, Frank. See you guys.
Bye, Tom.
See you, Tom. Yep. So Frank, thank you as well for coming on, doing some fundamentals and technicals. And we'll see you tomorrow probably for some more market moving stuff.
Sounds good.
All right. See you, Frank. And yeah, guys, always good to have both of those guys on. It's a nice clash between technicals, fundamentals, just getting a mix of everybody. So we'll continue to watch this. If you're not in the Discord, remember, we're going to be trading inside of there for the remainder of the day. I'm currently trading oil. Frank is still in that gold short that he shared. So if you would like to see the trades that we are taking and why, please click the link in the chat right now and send a direct message to our support line. Also, by the way, if you do click this link, there are special discounts for people who are watching the stream with us live. Just chat with someone on our team, ask for special discounts, ask for deals, and we can make it happen for you so that you can join us inside of Discord. We want our serious viewers here to also be on our Discord channel. That's where the conversation continues every day, and we're looking for serious traders who kind of want to go that next level with us. So come join us in Discord, click that link, chat with us, and hope to see some of you in the Discord later. Thanks, guys. Have a great rest of your day. See you next time.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoyed our content, make sure to subscribe for more. And if you create a new trading account with ACAP, you can get tools like the EDGEFINDER completely for free. Check the link in the description for more information. From all of us at A1 Trading, have a great day, and we'll see you next time.